All right, you guys, here we are on the 16th of December. Let's start off tonight with a chart of the SPY, and then we'll flip over to the S&P 500. One of the reasons I want to bring this chart up is we did close this week, end the week I should say, closing today, Friday the 16th, below the 20-day moving average, the 30-day moving average, the 50-day moving average, which was important, and we are still below the 200-day moving average. So since the basically mid-November, we have the overall trend again this week in the broad market. S&P 500 is down. Last week we were looking for a close above 1265 on the S&P, and we'll talk about that in a moment. But what we put out basically a week and a half ago or so was this post to the 4-minute traders saying that the odds favor that we may go back down and fill this gap. Now, the high on the 29th of November was 121 even on the SPY, and the lows that we put in this week thinking that we could possibly fill this gap on Wednesday was 121.47, and then the low print today intraday was 121.30. So it's quite possible we still have room to the downside. Decent support, as you can see all the way across, is at 120 or 1200 on the S&P. We believe we will get a bounce there if we continue to go lower. If we were to get above the downward sloping trend line, let's say above 125, 126, that would increase the odds that we're breaking out of this pennant pattern and we're going higher. So let's extend this a little bit for this week. You can see this very similar pattern in GLD, which we'll pull up, and then obviously GLD broke down considerably. The longer the range is, or the flag, or the pennant, and the tighter it gets, typically the bigger move out of it one way or another, meaning to the downside or to the upside. But we do believe buyers would be stepping in at around 120 on the SPY. All right, so let's take a look now at the S&P cash. Closed today basically at 1220. I kind of like this candle. This may suggest a day trade that we go higher, but I do believe before we bust through 1265, even this downward sloping trend line just above 1250, I think we're going to print 1200 on the S&P, but we'll see. There should be some buyers coming in there. At that time, we'll decide if we want to cover the short position in the 4-minute trader. But as it stands right now, clearly the overall trend is down below the 20, 30, 50, and 200-day moving average on the S&P 500. NASDAQ doesn't look any better. We've had this trend down for a while. Remember, 2600 was our line in the sand. We were also looking at the NASDAQ 100, closed at 2555 today on the COMPQ. We were looking for a close above 59, above this area of resistance, even though last week we were above the 50-day moving average. We didn't see confirmation to get long until we got above 59. Obviously, we feel the same way today. We are below the 50-day moving average this week. One of the charts that we did like last week, even though the overall trend was down, meaning short, and we believe we had a mixed market last week, was the diamonds, meaning the Dow ETF. We were above the 20, the 30, the 50, the 200-day moving average. So we did put a position on in the diamonds. Essentially what we were looking for to add to it would be a close above 12,250 on the INDU, or basically 122 on the diamonds. That never occurred. We would have added to it, thinking that we were building out either an inverted head and shoulders with the head here, left shoulder, right shoulder, or possibly a cup and handle, where we were building the handle here and then a break up through it. If we were to get above 122, we would get long the diamonds again. But we also said last week that we were going to stick with our discipline, that if we were to break the low that was put in a week ago Thursday, meaning on the 8th of December, we would exit the diamonds. We did exit the diamonds even though they held the 50-day moving average. At the same time this week, we also exited Nike. We did that on Wednesday, and we also exited General Mills. Now, even though the market was basically down, give or take 3% this week, we held our own. In some cases, we were flat. Some cases, a small percentage up and a small percentage down in some of the accounts, depending on how aggressive they are. But what kept us alive was the biggest position we had this week, which was in Treasuries, the IEF, 7 to 10 year Barclays Treasury exchange traded fund. We did let go of that because I wanted to go to all cash ahead of option expiration, so we did that Wednesday morning. But we did add to this during the week as well. On Tuesday, the IEF was actually down. There was a point when I was watching the cash, or the Dow was up, I think 109, and I believe when the Dow was up maybe 60 or so, we added to this, basically doubled our position in the IEF, and again, that's what kept us in good shape in terms of not going down 1, 2, 3% during the week. We did exit this. We may re-enter it. We're also looking at AGG, which is a bond ETF, and I'm keeping an eye on TLT. Right now, this is a little toppy. We're looking at a topping pattern here. We're certainly looking at a double top as of recent here. So let's see if it gets through that. Hopefully, we'll pull back in here and then pop through it. So we'll either be looking at the AGG or possibly a re-entry into the IEF. There is a little bit of a gap here, not by much, maybe 7-8 cents or so. I would like to see that get filled this week. I would like to even see it come back down and test 105 and hold. When we look at gold, this is the pennant pattern we were speaking of, and I think we've probably, I don't know, I know I said this last week too, but I think we've had this on here for 3 or 4 weeks, and it just stayed within this pennant pattern. We have not had a long position in this for quite some time. I believe we put a long position on our last one right in here, around the 162, 164 area. And I believe we exited it, I don't know, maybe $1 or $2 above it. So we'll just call it a break even. But once we started to break down here, we didn't like the pattern. And we didn't do anything with it in here. Other than in my own personal account, I was short gold. I still am short gold. This could possibly run up and fill this gap. But when I look at gold on a weekly chart, I think it's a pretty tough trade here. Long term on a monthly, it looks like the trend line is still holding. But if we were to bump this into, let's say, this type of look on a weekly chart, you'd really want to see this hold today's lows, for sure, this week's lows. You'd want to see it hold. Anything lower than that, if you're playing a bounce, I would get out. Let's take a look at that number. What quite possibly could have happened is on Wednesday, the low was put in at 152.05. 152.05. And then the low that was put in Thursday was 151.71. So that was taking out individuals that had their stops parked, let's say 3-4 ticks below the Wednesday low. They were taken out if they had hard stops on Thursday. So we may get a little bit of a bounce here. But having said that, if you're going to play this bounce, which we're not, just because of the volatility lately in the metals, I would have my stop 2 ticks under Thursday's low. And that was 151.71, so call it 151.79. That's a decent percentage back in terms of risk if you're going to play a bounce here. But I really think we're going to go up here only to go lower. I find it very difficult if we were going to challenge the 180 area again on GLD. All right. And by the way, this pattern pretty much turned out the way we thought it would. The main reason we put this trade on back here was we got above this area of resistance. And again, this was back on, what was that? Getting back to the 25th of October. So we put this trade on thinking it was going to fill these gaps. It did. What I should have done is dumped half of it as soon as it filled this gap. but we waited till it came back down and then we exited. But thankfully we did, because it's down quite a bit. All right. Let's take a look at a couple individual stocks that I think have decent chart patterns, even though the overall trend is down. And you could also have tight stops on these. This is Visa. One of my concerns is the gap here, but otherwise I do like this chart. If we were to get above the highs that we put in on the 8th of December, that high was 97.87. I think that's a decent trade, and I would have a very tight stop just under these lows of right around 94.89 in that area. Let's take a look at Verizon. We pulled this chart up before. This is kind of the ideal chart where it breaks out, comes back down, tests support or the most recent breakout area once, twice at the most, and takes off on higher volume. So that's a very good looking chart on Verizon. I don't think that there's a bubble in treasuries. Again, that's why we're keeping an eye on the IEF, the AGG. Let's take a look at XLU. This is utilities. Not a bad looking chart, not a buy yet. If you're going to get back into this, we did fill the gap. You see the gap here? Let's see if we filled that to its exact penny. Probably not. The high was 33.34 on the 29th of November. Let's see what the low is this week. Yeah, we're not quite. Let's check that out again. High was 34.34. The low here was 34.45. Pretty close, right? Within a penny. So I would like this above 35.20. If we got above 35.20, we would more than likely put this in the managed accounts with a tight stop just under today's low. Today's low was 34.47. All right, you guys, so that's it. As always, we'll finish up with the S&P cash. The overall trend continues to be down. What we will determine next week is if we touch 1200 or even a little bit below it, whether or not we will cover any short position in the 4-minute trader and possibly put on a little bit of a long position playing a bounce off of 1200, 1180 area. If we stop falling here as of the low Wednesday and we start heading up, we'll sit up on our seat with a close above 1250 on the S&P cash. All right, that's it. We'll see you guys next week. Doug McKay, antiwallstreetguy.com. We will have a post on Friday, Christmas Eve. We'll see you next week. Thanks.